What's going on, everybody? Charles Moon here, the stock strategist with Prosper Trading Academy. And today I'm going to give you a secret that I already taught my clients, but I want you to know. It's going to be the best chart pattern / trade setup you need to know right now. Now let's talk about it. Really simple. It's the letter W. Now before I get into the actual W itself, I want to break down why this is important. We always, talk about trends and how trends dictate price action, price movement, price direction. So ultimately, this is a setup where we're going to be able to find opportunities of stocks that have pulled back, whether in a long-term downtrend or short-term downtrend. The beauty of this setup is that it's applicable to any time frame. You want to pull up a weekly chart, you want to pull up on a daily chart, you want to swing trade with it, you want to day trade with it on 1 minute chart. It doesn't matter. It is going to fit any time frame. That's the beauty of this. Now, getting back to trend, we talk about market direction, price direction. Well, ultimately, a lot of stocks will start trending lower here, whether it's a short-term time frame or a longer-term time frame. We're always wondering where the bottom can be. Now, certainly we could reference technical levels where bounces could happen, but really, ideally, this chart pattern will give you an indication that the stock is reversing the trend. That's the most important aspect. When we talk about downtrends, okay, for those that don't know, it's really just breaking down to the core, lower highs, lower lows. That means the price movement is progressively going to continue lower. But when we talk about uptrends, right, we always say buy the dip on these uptrends. That also means that we're looking for higher highs and higher lows. Stark difference, right? Lower highs, lower lows. The determining direction is going to be predictably down. Higher highs, higher lows. The determining price movement is going to be predictably up. So what we're looking for is what's called the reversal of trend. Imagine being able to bottom pick a lot of stocks that you like. Let's talk about Tesla or Apple or NVDA. Or maybe we're going to talk about these penny pumpers here. Names like BBIG, for example, or CEI, which is going nuts. Or back in the day, CLOV before it started getting going. These all showcase one specific sign, and I'm going to teach you that today. It's called the W. Now again, we're going to focus back on the downtrend. With lower highs and lower lows, it's telling us the predictability of the price. The W formation actually comes in. This is the W, but we're looking for it on a slight tilt up. In essence, the bottom points of the W are going to be progressively higher lows. And you see how that's different than the lower low projection of the downtrend. So when we see that higher low reversal, the key component is breaking that mid peak of the W, and I'll show you on a chart in just a second. Once we get that confirmation, this turns into a buy low opportunity with great upside value. Imagine being able to pinpoint opportunities where your risk values, meaning the risk you're going to allocate on that trade, is going to be at its lowest point, with your reward values being at its peak or at its utmost. This is such an important component because if we could exercise some of the foundations of what it takes to be successful, discipline and patience, for example, being patient for that opportunity is going to be extremely important. Now, here's the aspect that you have to understand. Once that sets up, you do have to be fairly aggressive. You do have to pretty much attack it at that moment once it's confirmed the higher high. And again, we'll showcase that in a chart. That mid-peak point of that W is going to be extremely important because that is that centralized potential lower high. But if we drop back down, we don't make a lower low, and instead we're starting to reverse above where the lowest price is, and we get above that mid-peak. Remember, the W is a mid-peak. It's like two V's here. Once we get above that mid-peak, we're automatically showcasing, or the chart is showcasing, a higher high. You see how that the changing of the guard has occurred in that moment. We went from making lower lows and lower highs to making higher lows and higher highs. Remember, the definition of a downtrend is lower lows and lower highs. The earmarks or the definition of an uptrend is higher highs and higher lows. So again, when we visually see this, we not only know where our buy point opportunity is, it's on that break of that mid W peak, but we could also assess where our risk is. The stop should always be below the lowest point that you have on that price. So for example, if it came down to $10, bounced back to $10.50, came down to $10.25 and then traded up to $10.55, we have automatically made that higher high, higher low reversal. Pretty simple. Put your stop just below that $10 price. You should be buying just above $10.50. If it came from $12, guess what? That's your upside target. In that situation, in essence, we have a 3-to-1 reward to risk ratio. But if it came from $15, we now have somewhere in the range of 9-to-1 reward to risk ratio. This is the beauty, right? We're always saying, where is the bottom going to be? Where should I be a buyer at the bottom? This is a great way of finding that opportunity. And again, whether you're day trading, swing trading, position trading, this is going to play a prominent role. You'll be able to see it when I showcase it on the charts in multiple time frames. Understand the importance of this letter, the W, guys. W, right? They say W is for the children. This is going to be a major, major, major positive component in your trading going forward, especially if you're new. Even for the veterans, you may not have even noticed this opportunity, but guys and gals, this is going to be one of the most important, if not the most important chart pattern you will actually learn here in your trading career. We talk about inverse head and shoulders, the head and shoulders. We talk about flag formations, etc., etc. Listen, those are all great, but nothing trumps the W. W for the win, kids. W for the win. So some examples that you want to look into. Let's look into CRM. This is a beloved tech name, and obviously it's been trending down here. It bottomed out at around 201.57. It started to show the W reversal. It triggered right above 218. It ended up trading as high as 275. How about NVDA? Everybody loves NVDA. This bottomed out at around 115. It hit that mid-peak trigger at around 135.13. And next thing you know, NVIDIA's at $230. This is the power of the setup, guys and gals. Lower risk, higher reward opportunities. And obviously this is on the longer time frame. But if you just equate the actual setup to any time frame, an hourly chart, 30-minute chart, 5-minute chart, 1-minute chart, you're looking for the same design and you won't be disappointed. Now, if you happen to like the content, do me a favor, like, comment, and subscribe. Hit that notification bell so that you're alerted anytime we drop new videos. And in the comments below, let us know what you think about the video and if there's any other topics you want us to discuss. Peace and love, everybody.